I posted this tweet on Twitter on Intel. I said Intel is literally trading at liquidation value or tangible book value per share. And this is true. The stock is down over 59.5% year to date. I mean, it's horrible. It's terrible for Intel shareholders. This is by far the most requested stock. This tweet just went ballistic, and everyone's asking me about Intel. What I think about Intel. Can Intel make it out? Can Intel come back? Will it happen, or will it just keep going down? And I just have to be honest about something before I start the analysis. And this is that I'm not the best person to ask about semiconductors. The main reason I've never analyzed Nvidia, Intel, AMD, and these kind of stocks is because I try to stick within my area of competence, within what I'm comfortable in. And I'm not really good with semis. I've never owned a semiconductor stock in my life, believe it or not. I just always stayed away from them because I couldn't predict and understand the competitive space, who has an edge over who, over the chips and the technologies, all that stuff. So, and then it's a little bit cyclical too. So I just stayed away from it, and I've never really owned a semi stock. But I will do my best to give you my perspective on Intel. And Intel right now is trading at tangible book value per share of 1. So the tangible book value is around 1933. And tangible book value is basically taking all the assets, they manage the liabilities, and then you take out the intangibles, all that stuff. So tangible, like if everything sold for value and the company was getting liquidated and you didn't have any extra fees and everything sold just like the way it is on the balance sheet, you would get the same price it is today. So you're getting a lot of the other stuff for free. This is why the stock is cheap, but it doesn't mean it can't go lower. A lot of stocks like MPW trades 40 cents on the dollar. It trades, I believe, at 0.4 tangible book value per share. So if it's trading at tangible book value, it doesn't mean it can't go lower. But it's just to highlight, the just extreme fear around Intel, and it owns a lot of valuable assets. A lot of those fabs aren't easy to build, and they have a lot of valuable stuff, and this is where it's trading at. But you also have the CEO. He's finally buying some stock. He bought around 12,500 shares, around 252,000 in total of Intel stock, and he bought it on August 7th, which was like 4 or 5 days ago. And so he's buying stocks. The stock trading at pretty much liquidation value or book value per share. So I'm going to discuss it a little bit. For earnings were absolutely terrible. 2 cents adjusted versus 10 cents, terrible. They also missed on revenue. I mean, it's been absolutely insane. And the company is still trying to turn it around. They're going to cut 15% of the workforce. They also eliminated the dividend, and they're doing many different things to invest for the future. They're losing a lot of money, and a lot of bad stuff is happening. And a lot of people are saying that the CEO should resign or they should get a different CEO. Maybe. But I just have to say something positive about the CEO is that he's actually trying to turn the company around. He's not like just leaving it the way it is. Intel was, and it could be a free cash flowing company just like it was before. But still, I mean, he's trying to turn it around. He's trying to catch up to the competition. Whether he will be able to do it or not, this is the main questions that I'm going to try to answer. But at least he's trying to change something, and it's not easy. It's not easy to take all this pressure and do this whole thing, and your stock is crashing. Someone else would have just kept things the same, keep collecting dividends, and everything's still fine. But he's actually trying to change something. So I give him credit for that. But whether he'll be able to do that or not, this is what we're gonna find out. But for Intel, they did cut 50% of the workforce, and I don't have the latest numbers. And maybe it's not the best comparison, but Intel is not an efficient company at all. I mean, they have 121. I think this is 121,000 employees versus 65,000 for Taiwan Semiconductors, and AMD maybe is not the best comparison, but 15,500 for 2021. But if you compare it to Taiwan Semi, I mean, Intel has double the staff that Taiwan Semi have, and they can cut 15% of the workforce and still keep operations, going. And it's pretty good, and it's going to help margins a lot. Cutting the dividend is also going to help. It's not the biggest help ever because the company is losing, a lot of money, but $3 billion extra every single year is going to help a little bit. And they eventually will reinstate the dividend in the future, I believe. But for now, they did cut it to zero. And I believe this is the right move, and it should have happened, a long time ago. The main story with Intel is the Intel Foundry, and this is how they got all the credit from the government, billions and billions of dollars to build these fabs in the United States, because this is somewhat of a supply chain and national security concern. If something happened in Taiwan or something happened something else, manufacturing them in the United States is important. And I really like this area about Intel. It's not the most efficient business, but it is a necessary business. And this is the main bet from the management for the future. Now, I have to say, I'm not sure how efficient Intel will be versus Taiwan Semi versus the fabs in Ireland and other places where we have much lower wages. I don't know how Intel will be able to be compete other than if they just keep getting credits from the government. So if the government gives them certain credits for operating those fabs in the United States, then maybe they can sustain the operations. But for me personally, I just don't see how Intel is going to be able to compete again with Taiwan unless something happen over there. Hopefully not. But they have fabs in Ireland and other places where just wages are much lower and the costs are much lower than the United States. So I don't know how they will be able to operate unless they get more funding from the government, certain credits for operating in the United States. This would be the most likely scenario because such things are very important for supply chain and national security. So I wouldn't be surprised if this happens. The second one is Intel product. Again, I'm not an expert in this area, but I did read a lot of stuff, and I heard they're extremely late on the AI chips and AI stuff, and they have some technologies they're developing, but it's a little bit outdated and it's extremely late. So I'm not sure how they can compete in this industry, and that's why I try to stay away from them. But in terms of the foundry, I think it's the most promising one of the business. And of course, it is, putting up some losses recently. It's not the best ever. A lot of investments going into that stuff. And it's all about the future. If you're looking at Intel right now, trading like 65 times earnings, but it's not about now, it's about the future. And honestly and unfortunately, the future is far away. I mean, even the analysts, they're expecting 2024 to be the worst year for Intel, which is good because from then, sentiment will start to improve. This is normally what happens with those stocks. They go up before they get profitable. A lot of people don't understand this. They wait for the company to be profitable and they say, oh, now the stock can go up. But they go up in anticipation. So as Intel began to reduce losses and it begins to improve in terms of losing less money over time, it begins to improve profitability. So the market will start pricing in profitability before it actually happens. And this could happen in the next 2 years, in my opinion, between 2025 to 2026, which is why I'm going to give you a very interesting trade idea at the end of the video. But for 2024, it's expected to be the worst year. They used to make 11.2 billion in 2021. Now they're losing 19.2 billion dollars in free cash flow due to heavy capex. Capex gonna come down a little bit. Expected 7.8 billion for 2025. 2026 3.2 billion, losing like 700 800 million in 2027 to finally be massively profitable in 2028 with over 18.8 billion dollars. Now again, I'm not sure if Intel can pull this off, but if it could, I mean that would be mind-blowing in terms of the share price, especially if they can pull it off in 2027 or late 2026. Mainly, I believe it's going to be 2027 instead of 2028. I mean, it would be mind-blowing. The stock will explode, and it would be rewarding for shareholders. But I'm not sure if this would actually happen. And I believe no matter how much research you put in Intel, it's almost impossible to really know if it's going to happen. Now, the good thing is the company still has a pretty decent balance sheet. Of course, they still have a lot of debt, but they did have the spin-off of Mobileye, and Mobileye did give them a lot of cash and they can sell a little bit more. They have 11.2 billion of cash and around $18 billion in short-term investments they can sell or get rid of for them to convert them into cash and cash equivalent. And this is around 28 29 billion dollars of cash, and it should be enough until Intel starts turning profitable in free cash flow and then starts paying the dividend. So in my opinion, the main question is, are you willing to risk it? Are you willing to take this bet? Are you willing to bet on a company to become profitable in 2027 or in 2028? Are you betting on such turnarounds that doesn't happen very often? And I believe it never actually happened. Are you willing to make this bet? And I just cannot make this decision for you. And I can't tell you Intel is a buy or it's not a buy, but I can tell you how I'm thinking about it. And for me, I'm looking at Intel is it's going down, it's trading at tangible book, all that stuff is happening. And I look at Intel, and this is a turnaround that's, I mean, almost it's very hard for it to happen. It's going to take years and years to happen. But then I compare it to other opportunities in the market, something like Google. Like a lot of the quality stocks have pulled back, a lot of the big tech, Amazon and others. Google is trading at 20 times earnings, cheaper than Intel as of now, and is growing earnings 15, 16, 17%. I did a video on Google. Same thing with Amazon. Amazon is trading at 34 times free cash flow and is growing free cash flow, I think, like 45 or 50%. So I'm getting these companies that actually came down 15 to 20% on the months. So for me personally, if the entire market was trading at 6 or 7,000 and Google was trading at 30 times earnings and there was no opportunities in the market, then yes, I would consider buying Intel, because on a relative basis, Intel makes a lot of sense. But on a relative basis to other opportunities in the market, Intel right now doesn't actually make sense for me to open a position. Even if it's cheap, that's how I think about it. However, if I had to do something on Intel, and I might do it, I do some speculative stuff sometimes within options and other things. I share some of them in my group. If you're interested, this is the link. I mean, what I would personally do, I would buy like January, or I should say December 2026 calls. I think this is the furthest you could go. So as I'm taking this risk, I would put in maybe 0.5% of my portfolio or 1% in January 2026 call or December 2026 calls. And if I'm right and the turnaround starts to happen in late 2025, then Intel is going to be up huge from here, trading from tangible book value. But if it doesn't happen, then it doesn't happen and I don't lose much money. But at this way, I don't really commit a lot of capital into something that could be flat for years, and then I would be getting some upside if it happens. And this is how I think about that stuff. Maybe it wasn't the most helpful Intel video. I'm sure there's more deep dive, but I just wanted to do this one to give you my honest opinion on the stock. And it's not financial advice, just my opinion. Thank you for watching. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.